Jordan has a challenging operating environment which is constraining profitable growth for insurance companies. I'm Yvette Essen for AM Best TV and I'm joined by Filippo Novella, financial analyst for AM Best, to talk about a new report we've just published on the Jordan market. Can you tell me a little bit about the regulatory environment and how regulation is changing, and if companies are actually complying with increased capital requirements?
So in terms of regulator, the Central Bank of Jordan is expected to become the new regulator for the insurance industry in Jordan, and with that we expect the overall framework to become closer, to become more aligned with the international standards, with an overall positive impact on the safety and stability of the insurance sector. In terms of capital requirements, companies in Jordan need to comply with the minimum paid-up capital requirements. But not only with that, there is also a minimum solvency requirement of 150% based on a risk-based capital model. So in 2016, we have seen 7 companies out of 24 total which were in breach of this requirement. However, the regulator didn't take immediate actions. Instead, companies were allowed to take medium to long-term corrective actions, and in order to comply with it. This doesn't necessarily mean that the regulator has a relaxed stance on these issues. In 2014, for example, we have seen some companies forced into liquidations because of problems with their solvency.
Can we talk a little bit about the investment strategies of companies? Are they deemed to be high risk?
So when we think about investments, we also need to think about inflation. So inflation has been a major issue in Jordan in past years, and while in recent years it has been under control, there is still the potential for high inflation to happen going forward. So that's why we often see insurance companies having sizable position in real assets, such as real estate equity, which are seen as a natural hedge against inflation. As a consequence, these kind of investments are seen illiquid, and as such, they increase the overall risk of the investment portfolios of companies. However, in recent years, we have seen an increasing trend in liquid assets, such as bonds or cash holdings, which overall now in 2017 account for approximately 60% of the investment market-wise, and therefore we do expect the investment risk for companies to come down a little bit going forward.
And overall, how would you see the underwriting performance, the operating results of companies?
So of course, when we talk about performance, this can vary quite a lot between different companies. However, if we look at the market, we have seen underwriting performance constantly improving between 2012 and 2015, with a combined ratio coming below 100%. However, in 2016 and 17, there has been a deterioration in the underwriting profitability of insurance companies, with a combined ratio above 100%. If we had to look at the causes of this deterioration, they mainly came from the 2 major lines of business in the market, which are medical and motor. In particular, we have seen some major players reporting sizable losses. If we had to exclude these losses, overall we would be looking to a marginally profitable insurance market. In terms of overall profitability, we have seen an ROE quite stable in between 5 and 10% from 2013 to 2016, whereas in 2017 there has been quite a significant drop in profitability, with an ROE close to 0%. This is due to a combination of poorer underwriting and investment results.
Finally, what are enterprise risk management (ERM) frameworks like for domestic insurers?
So market-wise, we generally see quite developing and basic ERM frameworks among companies. However, in recent years, there has been an increasing pool of talent in terms of ERM capabilities, with an improving understanding of underwriting risk, which at the same time still clashes with quite underdeveloped capital management and natural catastrophe risk management and quite high investment risk that we still see in the investment portfolios of companies.
A copy of AM Best report on Jordan's insurance market can be found on ambest.com. For AM Best TV, I'm Yvette Essen.